It's proving to be another great month so far for Brent crude oil, trading up this month as high as $84 a barrel, best levels in about 3 years. Got to go back to October 2018. So are we going to see $100 a barrel for Brent crude, or is now the time to start getting concerned that this strength could finally start running out of steam? It was a bit of a tricky summer for the oil price. We saw the price in July peak again, up at $77, but by the third week of August, it was down below 65. So lots of volatility. But since then, it's shrugged off this weakness and bounced back from those lows to trade where we are now, pretty much its best levels in 3 years. You can see there is a bit of a mix of buyers and sellers. If you look at market sentiment here, 35% of our clients who are trading this are short at the moment, but that trend, for now at least, still appears to be strong. So as usual in this video, I talk a bit about what's been going on with oil, how the price of natural gas is affecting the oil market. Then we'll come back onto the platform and see if there's a trade to do. We do have the usual mix of trades running at the moment. There is a trade in here on natural gas that's slightly up given some of the strength we've seen in that market, but nothing on oil at the moment. So we'll see if we can fix that and come back and set a trade up. Hello, I'm David Jones from Capital.com, and I thought let's do an update on Brent crude oil. The market price continues to push higher, 3-year highs so far in Brent crudes. Of course, West Texas crude, the US flavor, is up at 7-year highs. So as usual in this video, I'll talk a bit more about what's been driving crude, some of the recent news. Then we'll jump onto the charts, see where the opportunity is, and see if we can get a trade on for Brent oil for the next few weeks. If you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. It means we can continue to push out lots of different videos throughout the week. Plus, of course, every Friday at 2:30 UK time, I do the live stream direct from the YouTube channel. If you're subscribed with the alarm bell pushed, you get a notification off YouTube just as we're about to go live. Right, let's get into it and have a look at Brent crude in a bit more detail. So like I said there, we've recently seen the price of Brent crude push up to 3-year highs, so best levels since October 2018. The summer was pretty volatile. We saw quite a sustained sell-off across the oil markets, but bounced back, shrugged it off, and away we go again, up at these multi-year highs. The International Energy Agency this week has come out and said that record natural gas prices, a market that's done incredibly well in recent months, you might know from our recent videos, but record prices for natural gas is going to boost demand for oil. So they reckon this is something, or that has helped perhaps lift the oil price to where we are now. So the International Energy Agency says that the power sector and heavy industry will switch to oil as a fuel from other more expensive sources of energy. I mean, oil is clearly expensive compared to where it's been over the last year and a half, but other energies like natural gas have even outpaced oil this year. Also helping the price has been the US Energy Information Administration that came out and said that actually crude oil output in the US this year for 2021 will decline more than was previously thought. It will bounce back in 2022, it says, but this year there won't be as much output. So again, we have something of a supply-demand imbalance going on in the oil markets globally. Of course, there is a risk here that higher energy prices cause something of an energy crunch. Energy gets more expensive, erodes profitability, jacks up inflation, and causes a real problem for the global economic growth, which, if we did see that start to change, would have an impact, clearly, you'd think, on the energy prices. But at the moment, these markets are still strong. So what's next? Are we going to see Brent oil hit $100 a barrel before the year end? This would put it at a 7-year high, or actually up at these levels. Should we start getting perhaps a bit concerned that the run has gone just about far enough? We'll take a look at the charts in a second and set a trade up. First of all, let's talk about the levels to watch. Recent highs for Brent oil up around $83 a barrel. After that, we'll be looking at sort of 85, 90 as perhaps the next intermediate targets. On the downside, we've seen short-term support on a recent sell-off emerge around $79 a barrel. But as usual, to put some colour on these numbers, let's take a look at the charts and see if there's a trade to do. So if we took a step back and took at the longer term picture for oil, this is going back just over 3 years. And you can see that high from October 2018 coming in around just above $86 a barrel. So at the time of recording, we're just a couple of dollars or so away for that for Brent crude. And this, for me, is the longer term trend off those lows in April, where the price briefly for Brent crude cash traded below $20 a barrel. That touch there that we had in the 3rd of August, arguably the third touch of the uptrend, and the price has moved out to higher highs again. If we took a look at the moving average here, traditionally, of course, moving averages are great in trending markets for trend following. We get a buy price when the price moves above the moving average. We last had that in the 3rd week of August as the price moved through $70. And here we are, almost 20% higher, trading at $83.70. So for now, at least, the moving average still very much bullish on Brent crude. If you take a look at the RSI down here, the RSI has been sort of pushing into overbought since the end of September. So it's spent a couple of weeks pushing near overbought. As I often say, though, in strong trending markets, you get extreme signals from RSIs, and they're like a bit too quickly. So the trade I want to do, even though I think some of the swings we're seeing in oil are perhaps somewhat excessive, you can't argue, or I can't argue, with the trend in this market. So I want to be a buyer. I maybe don't want to buy here, but what I want to do is just zoom in on this swing we've had since mid-August. Let's switch this to an hourly chart. So our trend in oil off the August lows, or the late August lows, I should say, looks something like this. We've got higher highs, we've got higher lows. That what is it? That 20%. Well, it's actually no. It's a move from the lows of about 64 to 83. So we've seen a $20 move off those lows there in August. And this is where we are now. So for me, looking at the trend line, we've got trend line support coming in around $79. We've got quite a good low in here, short-term low from the 7th of October at 78, 77. So 79 in the short term looks like an interesting level for stop losses. But what I want to do, I want to give the price a bit more room. And I quite like the look of these lows, this $76 area here. The lows from September the 24th, low again September the 30th, and it was a high on the way up. So I wonder if putting a stop loss, perhaps the other side of $76, is an interesting one here. So what I'm going to do, I'm going to leave an order in to buy. I want to buy into this trend. Now, the risk is, if I'm waiting for a dip, the risk is that I miss out on the next swing higher. That's always the problem if I'm placing orders in. But what I'm going to do, I'm going to put an order in to buy at 80. So basically, if the price gets knocked back to where it was about a week ago, I'm going to be a buyer. And if that order gets filled, I'm putting a stop in at 74. So that's going to be the trade for me. So looking to see if it can swing higher back towards 90 from here. Let's set that up. Okay, we're ready to go. So the price at the moment is trading at 83.83 to buy. I'm going to buy 58 barrels if the price drops back to 80. You can see that highlighted on the chart there. If that order gets filled, I want to give it a bit of room because it's a volatile market. It's moved $20 in about 6 weeks. So me having a $6 stop, I don't think is too ridiculous here. So I'm going to put my stop in at $74. So that gives me a risk on this trade of around £250, which is our usual risk on the trades we do in this account. Let's send that limit order through and take a look at things again. So I've placed the limit order buying 58 barrels of Brent oil if it gets to $80. Let's see if that order gets filled. And for me, it's only if we do start to trade much below, let's say $78, does it start to look as if this trend from those late August lows is finally running out of steam. At the moment, it's still strong. Let's not forget, it was only a couple of days ago the price pushed out to its best levels in 3 years. So it's a market I don't want to be short of, regardless of perhaps how crazy I might think the price is up here. I want to go with the market momentum, but I'd like to see if we get a bit of a sell-off back to 80. Does that order get filled, and then take it from there. But I think we are set for yet another interesting few weeks in the price of oil. That's it for this update in Brent crude. We'll see. We'll see where it goes from now. Undeniably strong at the moment. You can't argue with that trend. Let's see if it can last in the month ahead. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.